Richard Nicolosi.
It was 5 years ago. Samsonite seemed ready to pack it in. The luggage maker had filed for bankruptcy. Let's take a look at Samsonite today. You might not recognize it. Much of the company's new look is due to its CEO, Richard Nicolosi, who took over the helm in May of last year. Upon arrival, he immediately implemented a 5-point strategy. One of them was to open the trunk of that checker cab. Then he got rid of some excess baggage and helped the luggage maker make money again. The plan seems to be working. The company is back in the black. It's rolled out some new bags, has a new ad campaign, just opened a chain of stores called Travel Expo. Wall Street is certainly applauding the changes. Its stock has soared to $50 a share. The 52-week low is about a third of that, 17 3/8. Here to talk about it is Richard Nicolosi. He's CEO of Samsonite. Mr. Nicolosi, thanks for being with us.
Good morning, Mark.
I think everyone can understand the business of making suitcases, luggage, and bags, and things of that nature. But you are dramatically changing what your company does with this Travel Expo thing. Explain it to us.
Well, Travel Expo is a one-stop travel shop. It's, from a retailing standpoint, a category beater. We found as we did our research with our consumers, our consumer homework, if you will, that what consumers most want is an opportunity to be able to go into a store and have all their travel needs handled in one situation. So we have established exclusive arrangements with American Express Travel Services and Carlson Travel Services so that they can get their travelers' checks and tickets, reservations, etc. They can determine which hotel they want to go to. They can also buy the luggage they need. They can also buy any travel accessories necessary. And as a result of that, they can learn everything they want up to and including exploring on Rand McNally the appropriate route to go from destination X to Y.
Well, I guess my question, Mr. Nicolosi, is your company up to it? Until now, your only retail presence has been in what most people would consider to be, these outlet stores. Now you're talking about a totally different retailing concept, and it is retailing after all.
Well, the outlet stores are also retailing, and all I can tell you is that the rate of improvement and performance in our retailing business has been nothing short of sensational. Let me put it into perspective. About 15 months ago, that business for us was somewhere around $40 to $50 million. Today, we just ended the fiscal year, in January 31 of 1997, we ended a fiscal year where we added 50% to $75 million. We're now straight lining after the first quarter to up another 50%. As a result, we're seeing a rate of growth that is just nothing short of phenomenal.
Where's the growth coming from? Are you more effective in your advertising? Are you simply being more effective in targeting your audience, which I would imagine is business people, right?
Business people are an extremely important part of the business. If you look at the total category, you've got about 20 to 25% of people who account for 1.5 purchases of luggage every year. And then the rest of the people essentially are buying luggage on once every 8 or 9 year basis. So the road warriors of the world are our target audience. Mm-hmm. That is the group we're targeting in our advertising. That is the group we're targeting with our Travel Expo stores. And also, most importantly, that is the group we're targeting with our brand new products. What we've done is we've looked around the world to find the best designs that exist, and many of them existed in our Samsonite Europe operation. We took those designs, searched and reapplied them to the U.S., and then took patented innovations like our Easy Cart, which is 4 wheels on the ground, so all the weight is all on the ground, not on your arm, and you can mobily move your luggage around, thereby making travel easier.
Mm-hmm. All right, Mr. Nicolosi, thank you very much. We appreciate you sharing your time with us.
Thanks, Mark.
Richard Nicolosi is CEO of Samsonite. He joined us from our Midtown Bureau. Up next, more from our guest host, Larry Kudlow, plus Maria gets us ready for the opening bell on Wall Street. And up later, the new United States Labor Secretary will join us. And a comeback for the junk market, the junk bond market? Well, we'll see. Stay tuned.
Hello, I'm Christine Overholt with the Bloomberg Forum. Joining me today is President and Chief Executive Dick Nicolosi of Samsonite Corporation. Thank
Hi,
you for joining me.
Christine.
Hi. Well, Mr. Nicolosi, your company's second quarter is going to be wrapping itself up in the next month or so. And we were wondering what the outlook was and whether or not you're comfortable with analysts' earnings expectations for this quarter.
Yes. Yes, we are. We think that the Samsonite game plan that we put into place approximately a year ago is progressing along very nicely. As you may know, we just finished a quarter, the first quarter, with a profitable quarter. Earnings per share were 41 cents. That represents a dramatic improvement versus the 60-plus cents loss of the year-ago period. And we have been able to expand gross margins and EBIT margins as a result of that. And we think, based on everything we can see, and naturally the quarter is still only halfway through, but based on everything we can see, we think we can continue to make the kind of earnings progress that this company has the potential to accomplish and what the Samsonite game plan can deliver.
Can you describe what you think are the most important elements of that game plan and how that has evolved over the last year?
Sure. It's always important to start with what you're going to need to run through the game plan for the rest of the time. And that starts with people. You've got to have great leadership, and you've got to have core competencies, and you've got to have those people with those core competencies in the right organizational design. So step one of the game plan is to get an organization of the right people designed in the right way to be able to deliver results.
Did that mean any employee cuts for you, or did that mean bringing in new people?
It meant both. We had to go through the organization and assess who were the people who were most competent and qualified to deliver this good company into a great company. And then where we had areas that we had to improve, we brought people in. So in a sense, we took the best of the best that was within Samsonite, brought in some key strategic players in the area of consumer marketing and general management, and that represented the core group that was going to lead this company into the future. So that was step one.
How many employees did you cut at that time, and do you foresee any further cuts in the future?
We think that we have been able to accomplish most all the cuts that are necessary, and that turned out to be about 12% of the worldwide organization. And as a result of that, we've been able to improve our cost structure while at the same time making the organization much more effective, because they didn't have to deal through so many different levels and didn't have all the redundancies that are typical of a business that is not functioning well.
So how many employees do you have now?
About 7,000, and we had about 8,000.
So, and that's worldwide?
That's worldwide, yes.
So then what are your top priorities going forward?
Okay, so that was step one. Now, in the future, our focus is on, first of all, establishing a product architecture for our business around our brands that can drive this business. And one of the first things you always want to do when you take over a new business is go around the world and see what's working well, where the diamonds are, and understand how you can take those diamonds and leverage them on a global basis. One of the things that we found was in Europe, we found products in Samsonite that were basically like a BMW. So if you have an 850 BMW, you have the best performing luxury type products, and at the same time, for people who can't afford that, you have a 318 and a 325 BMW and everything in between. Samsonite Europe was successful with exquisite lines of products at the top end, as well as in the middle and in the lower end, so that regardless of your social economic situation, you were able to buy a quality Samsonite product. We have searched and reapplied that to the U.S. to drive not only improved margin, but also to broaden the appeal of the product and thereby generate top-line growth.
So were the products in Europe different from those being sold in the U.S. at that time?
Yes, which is kind of counterintuitive, because you think of like Louis Vuitton or Chanel or Armani, and they don't sell different things anywhere else in the world than they do in another part of the world, so why did we? And there was no good reason. So one of the things that we were able to do is dramatically reduce the number of stock keeping units, the SKUs, by 37%, and bring only the best products from around the world, search and reapply them, and then globalize them. So that if you and I were in Hong Kong, we could buy the same fantastic Samsonite products there as we could in New York City or in Paris, France.
So you basically created global products.
Yes.
Whereas before you seem to have more regional products.
A lot more regional products. In fact, at one point in time we had over 100 different product lines, and now we're distilling them all into 8 to 10 global product lines.
So how is that going to translate into revenue growth over the next year, and then looking forward, say, 3 to 5 years?
Yeah. At the annual meeting this morning, I was able to share with our fellow shareholders a vision for the next 3 years. And that vision said that basically our company, which is about $750 million right now, would essentially double by the calendar year 2000 or our fiscal year 2001. And during that time, we think we could not only generate a $1.25 to $1.5 billion business, but also generate EBIT margins that would double from the current 8.5% to about 17% in that future situation. Just to give you some perspective on that, about 18 months ago, maybe 20 months ago, we were not making any EBIT margin. Then in the first 6 months of last fiscal year, we were making about an EBIT margin of 5%. That moved to 7% in the second 6 months, and in the most recent quarter, it's now 8.5%. We think over this next 3-year period of time, we can take that 8.5% to about 17%, thereby generating EBIT of approximately $250 million, or taking our earnings per share estimates of the current $2 up to about $6 to $7 over that 3-year period of time. So we see a lot of upside potential to this business over that period of time. And the way we would accomplish it is to maintain our current 12% rate of internal growth while adding to it some strategic acquisitions in the retailing area and some logical extensions in the luggage area from a brand standpoint.
The 12% growth you're referring to is earnings growth or sales growth?
Sales growth.
Sales growth.
Yes.
Okay.
We think earnings can grow closer to 20% compounded during that period of time.
Mm-hmm. Okay. So is part of this expansion also expanding globally, or are you really focusing on revitalizing your U.S. operations?
Both. The revitalization of the U.S. business is well underway, and we're making good progress. At the same time, we've announced startups in mainland China and Ningbo, just outside of Shanghai, and in India, 2 of the most highly populous places in the Far East. And I'm glad to say that we've now started making and producing and selling and marketing products in India, and are within a couple months of doing the same in mainland China. So those are 2 big areas that are going to mean a lot for us in top-line growth, not only in the balance of this fiscal year, but beyond. We've also, well along the way of establishing a negotiated relationship in Korea and accomplishing additional Malaysian operations that will model our already successful Singapore business.
So what are your biggest markets? Say, what are your top 5 markets right now?
The 2 biggest markets are the U.S. and Europe. And that's followed closely now by the emerging business in Southeast Asia, including Hong Kong. And the last business is a licensed relationship we have in Japan, which in Japan we have do licensed businesses as large as $80 to $100 million. Japan, Samsonite is a big name.
If you were to break out your sales for each of the regions, how would they break out?
We have about 51% in North America, 49% outside of North America. Of the percentage that's outside of North America, about 41 to 44% is in Europe, and the balance is in the Far East currently.
Great. Well, Mr. Nicolosi, I'm afraid that's all the time we have. But I want to thank you for joining us today.
Thank you so much, Christine.
For the Bloomberg Forum, I'm Christine Overholt. Thank you.
Thank you.
That's great.
That's great.
The exclusive Bloomberg Forum interview series leverages the strengths of the award-winning Bloomberg Business News and the Bloomberg Online Terminal, giving the interviewee complete information distribution, all in one place, all at one time. The interview that you've just watched is reaching financial professionals and individual investors through online electronic newswire, audio-visual multimedia reports, radio, television, magazines, and newspapers. From small growth companies to multi-billion-dollar conglomerates, the Bloomberg Forum helps companies communicate with this targeted audience. The Forum interview process begins with a visit to Bloomberg's state-of-the-art studios, where a Bloomberg Business News reporter will conduct a videotaped interview. The interview then forms the basis for an electronic print article that's distributed to all 250,000 people who subscribe to Bloomberg's core product, the Bloomberg Terminal, as well as more than 160 flagship newspapers worldwide. For those individuals who do have the use of a Bloomberg Terminal, Bloomberg offers the latest in multimedia technology. The audio-video from every interview are compressed and produced into a multimedia report, which is accessible on demand by all Bloomberg subscribers. VHS copies of Bloomberg Forum events are also available to order. In an effort to expand Bloomberg's audience even further, Forum highlights also appear in Bloomberg Personal, a monthly personal finance supplement that's distributed to more than 6 million consumers through major U.S. newspapers. The publications include the well-received Bloomberg Multimedia page, which makes it possible for individual investors to call an 800 number and request specific information on a company, either in print or in audio format. To add to the benefits of print media, each month a Bloomberg Forum interview appears in Bloomberg Magazine, which reaches 250,000 sophisticated readers who consider the publication a must-read and a must-save. Why? Because Bloomberg Magazine has proved a valuable source of information for professionals in the financial markets. In an ever-progressing effort to saturate the media world, the Bloomberg has carved its own niche in business television. 65 million of the nation's top investment professionals and sophisticated consumers tune into Bloomberg Business News on PBS every morning to get a head start on the day's business and economic news. Immediately following the top stories of the day, which kicks off the show, the Business Forum highlights a newsmaker interview. News from selected Forum interviews are also featured on Bloomberg Information Television, a 24-hour news service available on DirecTV satellite television and various cable outlets. And market experts and portfolio managers who take part in the Bloomberg Forum will also appear on USA Network's First Business program. News from those Forum interviews may also be featured on Bloomberg Personal, a personal finance show that's nationally syndicated, and Bloomberg Business Updates that air on the Fox television network. Bloomberg Forum interviews may also be heard on Info 1130 AM, an all-news New York City radio station with programming syndicated throughout the U.S., reaching 200 million listeners. And finally, as a natural supplement to the Bloomberg Forum process, Bloomberg conference centers in New York, London, Tokyo, and Hong Kong are available for analyst and shareholder meetings. Professionals worldwide can participate in meetings in person or through conference lines. To sum it up, the Bloomberg Forum is CEO interviews, market expert interviews. It's meetings with analysts and portfolio managers. It's getting information to those who can use it all in one place, all at one time. Bloomberg caters to the world's top financial and business professionals, getting information to them in whatever format they need to make their important business decisions. For more information on the Bloomberg Forum, call 1-800-448-5678, extension 208.
The Financial Network.
Today on Who's in Charge, we'll meet the chief executive of Samsonite and find out how he has turned an ailing company around and find out where the company is headed. In his first year as CEO of Samsonite, Dick Nicolosi cut costs, slashed jobs, and created a restructuring plan that would include an expansion overseas. Pretty ambitious. Strategy is paying off, though, because since he took over, stock price has doubled. And last week, Samsonite announced quarterly earnings that were 16% above what Wall Street expected. Joining me now is Dick Nicolosi. He is CEO of Samsonite. Welcome back to Who's in Charge. Let's talk a little bit about Eastman Kodak, actually. First, we just heard about the problems that this company is having. Mr. Fisher took over that company a number of years ago, did a restructuring. The stock did terrific. And then it seems that the company stalled. You're a CEO in a turnaround situation. Looking at Eastman Kodak from the outside, what would you say went wrong?
Well, first of all, let me say that I'm not running Eastman Kodak, so it's always difficult to put yourself into somebody else's shoes. Now, having said that, I'll take some educated guesses. My first thought is that the plan at Kodak actually took place over too many years. You started, in that case, with a restructuring, then moved to a divestiture of businesses, and now have moved to a core business set of strategies. I'd argue, for one, that you'd want to do it kind of the other way around. What do you want to take this company to be in the future? Define what that is. Define where success is going to be and where it's not. And then with that plan, that vision in mind, make the necessary moves from the standpoint of divestitures, from the standpoint of restructuring the business, cutting down the number of people if necessary, and the like. What does that do for you? Two things. One, you're smarter in terms of how you restructure the business, and you don't have rework.
And you don't have the competition figuring out how to beat you.
Exactly, exactly. Competition doesn't have 3 or 4 years to listen to your strategy and come up with the ways to parry it and actually come out ahead of you. And from what I understand from the Kodak situation, the Fujifilm situation is a big part of the problem.
That's right.
Well, they had 3 years to study it.
Also, one of the problems that Kodak is having is that it's selling overseas and it's being hurt by a strong dollar.
Yes.
You're selling overseas. Have you been hurt by a strong dollar?
Well, we've been hurt from a top-line growth standpoint to the tune of about 6% of dollar sales. However, we haven't been hurt at all from a profit standpoint. You see, one of the things you always have to do, we think, is look at the business, look at the general economic macro trends, and then decide if it's appropriate to put into place hedging programs. And to then not go so far as to be speculative with your hedging, but to hedge your plan in the region involved. So what we do is we hedge about 90% of the profits, or the EBITDA in our case, of our business in, say, Europe. And as a result of doing that, we are going to actually earn more profits than what we lost in top-line growth in terms of the strength of the dollar.
Let's talk a little bit about the company, because part of what you're doing is really coming out with new products.
Yes.
And you're selling around the world. Is your sense that in emerging markets that people are going to travel more and they want suitcases? I mean, is that really the strategy?
Oh, quite definitely. One of the key points that we always have to keep in mind is that this is a business that is $4.5 billion in world size. And actually, the rate of growth is double-digit in these emerging markets. See, they're becoming part of the Worldwide Business Club. The Worldwide Business Club demands travel. If you're going to travel, you got to have suitcases. And as a result of that, they want to have more top-end products, products that deliver upon ease of mobility, ease of handling, style, fashion, and internal organization, because they want to be a full business member.
And you don't have a lot of competition around the world, is that right, or do you?
We're very lucky in that regard. We are the only global company. We are the only leader in this business, and as a result, we're really up against relatively small, privately owned, generally, competition. So this is a market that is due for a consolidation over the years to come.
And you assume that you're going to be a big part of the consolidation? I mean, are you going to be picking up companies as a result?
We hope so. We hope so. We think that we can build upon our position and achieve not only a leadership position, but a position that could account for some 50% of the luggage business in the world.
When you came to this company, it was hurting, but one of the things you saw was a strong brand?
Yes. It was hurting in the sense of it had a lot of great talents. It had a great leadership brand in the right category with the right competitive dynamics. However, its cost structure wasn't right, and more importantly, it didn't behave as a cohesive global marketing company. And one of the things that we've been able to do is create that vision and that structure for what can build Samsonite into this wonderful global brand, and then take that and fashion a set of cost structures around it to make it profitable.
Thanks very much. Dick Nicolosi, the CEO of Samsonite. We'll have you back to find out how the process continues.
Thanks
for
Jan.
being here.
Samsonite shareholders really bagged some profits today. Samsonite shares jumping over 4 points to shy of 44 after the luggage maker said that second quarter earnings topped $10 million or 48 cents a share. That's before some extraordinary charges. That was still 4 cents more than Wall Street expected and well above last year's loss. Here now to talk about it, the man who, well, Samsonite shareholders are no doubt thanking today. He's done what his predecessors apparently could not, turned Samsonite's red ink into black, and he did it in just a year. He's the chairman and CEO, Richard Nicolosi. He is Al Dunlap's former right-hand man and the guy who single-handedly revamped Samsonite's product line. He's here now to tell us how he did it. Welcome, sir. Congratulations.
Thank you, Neil. Thanks for having me.
We're flattered to. I got to ask you, you did this at a time people were saying Samsonite was dead. Not too long ago, I remember people saying Samsonite was luggage material. What happened?
Well, brands are at the heart and core of a consumer products company, and the brand name Samsonite among consumers still had a lot of equity. And what we sought to do in the last year is bring together the products, the global structure necessary to drive those products around the world, and then permit that brand Samsonite to grow as a global brand ought to grow. And as a result of that, we've kind of defined a very important hallmark time now. We've completed 4 consecutive quarters of making money, and we've done that by globalizing the brand.
You know, I certainly don't want to rain on that parade, Richard, but here's some of the problems that some on Wall Street cite. A lot of the people you sell luggage to have gone out of business in the last year or so. I think Montgomery Ward and Best Products, and they say, you know, where are you going to find the outlets for your luggage?
Well, while those outlets have gone bankrupt, the Montgomery Ward's Best Products and so on, other accounts have taken up the slack. The Federateds of the world, the May companies, our own company-owned stores. We now have 172 stores that are realizing net realization growth of 48% fiscal year to date, and on a same-store basis are growing close to 20%. We will make more profits and have made more profits in this first 6 months out of our retail operations than was made all of last year. So our business is very, very healthy.
Well, let me ask a little bit about where you see things going. One of the things that has been helping you in this restructuring effort is the fact that more folks are doing more traveling, and it says something about the improving economy. That is generally a cyclical type phenomenon, fairly or not. Are you worried?
No, I'm not. Actually, the luggage business is not all that cyclical. What tends to happen is in bad times, the airlines will reduce their fares to maintain higher load factors. So the level of travel is equal to or greater in bad times than it is in good times. So as a result, people need luggage and need a means of conveying their stuff. Now, what we're bringing
especially
to the
some
party,
of the casual stuff that's been a motif of yours, right?
Oh, absolutely. And what we're bringing to the party are feeding to 4 key consumer needs. Ease of mobility through our easy carts and our brand new big wheels, ease of handling, and that comes about through our new Combat Combo type products, internal organization, which we've improved in all our products, so everything's organized and allows you to travel more easily, and finally, styling and fashion. Industries have been created on the basis of style and fashion alone.
No doubt. All that is well true, and I know globally you're seeing sales pick up in every region. But on a dollar-weighted basis, without getting too arcane about this, the strong dollar's got a boomerang eventually, doesn't it?
Well, if the dollar were to continue strong for the next 10 years compared to other currencies, that could create a lot of problems. However, in the next year to 2 years, we're properly hedged. We have hedged our European and Far Eastern plans so that we are in a position to be able to preserve the EBIT that will come with those lost dollars, even though we won't be able to show dollar sales growth as a result of those growths in other markets, whether it be Europe or the Far East.
I see. You're talking about earnings before interest and taxes, that sort of thing.
Yes.
Okay. Richard, thank you very much. It's a pleasure having you on. Congratulations again.
Thank you, Neil.
All right. If you ever talk to Al Dunlap, give him my best.
I sure will.
All right. Richard Nicolosi, thank you very much. The CEO of Samsonite.